You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody! Oh, I gotta fix my camera again. I think we're gonna be okay though. Hey, how's that? Hey everybody, it's Jonathan. How's everybody doing? Welcome to Masters in Trading Live. Masters in Trading Live, I get on here every single day the market's open, 11 o'clock Eastern Time, to go over a few tidbits, share a few thoughts. Excuse me. And then once in a while, we'll share our trade of the day at the end of the presentation. I was on vacation this past week. I was on vacation from Monday through Thursday, and I missed a heck of a week, right? Lots of volatility. First vacation I've had in a little bit. I went away with my 18-year-old. We went to Philadelphia and just had a lovely time, eating lovely food, going to museums. We are Birds fans, so we got to go to Eagles training camp practice, which was a lot of fun, although it was 100 degrees and super hot. I can't believe those guys practice in full pads. What else did we do? We got to see Zach Bryan, who I'm not too familiar with, but it's one of my child's favorite artists. He's 18. Funny enough, I grew up in New Jersey, and one of my favorite artists is Bruce Springsteen. And Zach Bryan played for 2 nights, Tuesday and Wednesday. Tuesday, we ended up going. Lightning delayed for an hour and a half. I got home at 2 in the morning. That's the latest I've stayed up in probably 30 years. The next night, Zach Bryan played again. We didn't go. And Bruce Springsteen came on stage. So that would have been a lot of fun. But nevertheless, my kid had an absolute blast. We had fun. But nevertheless, let's get into the week. Very volatile week. So we're going to go over the Traders Week. We have a community. So when I go away for the week, I get nervous because I'm available to answer questions in our Discord community. And of course, when I'm away for the week, chilling with my kid, I'm not going to be as available. So I was a little nervous this week. So let's go over the Traders Week. I want to go over our programs. We have 4 programs at Masters in Trading. I want to go over one of those because I asked in Discord this morning, I said, guys, out of our 4 programs that we had, VIX spiked like crazy this week. Which of our programs do you think had the best week? Let's go over earnings. We are in the heart of earnings season. And then we had a freaking crazy earnings trade where we were able to lock in 344% in just under a month. So I'm going to go over that, guys. Let's get into it. We obviously got a whole bunch to cover. So I want to start here. We say this a lot. Teach a man to fish. Feed him for a day, give a man a fish, feed him for a lifetime. That's really the ultimate goal. A lot of people have been trading for a long time and have used different approaches, but how we trade at Masters in Trading is very different than you probably learned. So I just want to highlight this. Brian, I'm learning to fish. I just got to say thank you to Masters in Trading for all the education and the tools in the amazing community. He ended up having a trade, grabbing 600%. But the great part about the trade is just low risk, high reward. So Brian, congrats. That's exactly what we're looking for. And in the past, many people are told that options are too risky. If you're selling options, that's risky. If you're buying options, you know exactly what your risk is. You can never lose 1 cent more than you're willing to bet. So therefore, options, once learned, are absolutely not risky. Stock is risky. Trading without education is risky. Buying options for a dime, 8 of them, you can only lose $80. You can never lose more. Jeff here too, this was from today. I'll have to admit, JR, since I've been here, I'm much more confident. Trading is about confidence. You put on a trade, you can't have doubt. That's why before you get into the trade, you make a decision on how much you're comfortable risking. We want you to be confident. We want your losses to be far less. And actually, you're right. I don't keep looking at the market every few minutes. And I've actually had more profitable trades than before. I'm definitely moving in the right direction. Jeff, thanks for sharing. And I love seeing this from our community. And we just have some more to say. I have to say the teachings of patience and how to do intentional investments. These expiration dates feel more like Christmas. So this is awesome to share. Moving on, give a man to fish and you feed him for a day. Teach a man how to fish and you feed him for a lifetime. Way to go, fishies. Okay, we have 4 programs at Master the Trading. Advanced Notice is unusual options activity. We want to find where the institutions and endowments are betting their money, and we want to follow them. We want to piggyback them. Sometimes they're bullish, sometimes they're bearish. Earnings advantage. Earnings advantage is like clockwork. The way that we trade earnings is we find earnings that are priced too inexpensive going into their earnings announcements. So we are buying volatility. All of these trades are buying volatility. As far as direction, we don't know. We're not betting on direction. We're betting on volatility. So when I asked everybody, blockchain this week, blockchain got their butt whooped. We bought some more Ethereum, fine, but kind of like a meh week. And then our divergence trader is just trading one thing against something else. Peanut butter against jelly, gold against silver. So lots of different trades here. But the one that performed the best this week is without a doubt is going to be earnings. Why? Because in earnings, we're buying uncertainty. Earnings, every single earnings quarter, 4 earnings throughout the year. When we come into earnings, we're buying uncertainty because we don't know what that earnings release is going to be. There's an expectation of movement. If we can find good value going to earnings, that's a darn good trade. Dwayne, excellent question. Dwayne's in our all access, learning a ton. When we buy earnings, we are buying volatility. So let's go through an example. The stock's at 20, and we think the sucker is going to move. We don't know exactly how much it's going to move. And Dwayne's saying, should we do a strangle? Now, a straddle, we would be buying the 20 strike. To do a strangle, we would buy calls and buy puts. And the idea is that you're buying stock from 22 and you're selling stock from 18. Anything in between here is dead. We're playing for movement. But the question that Dwayne asked, and it's a really, really good question, do we want to be $2 away higher, $2 away lower, or do we want to look to spend the same amount for each strike? Because if we just go $2 higher and $2 lower, we might see the higher is twice the price. Well, if that's the case, we want to defer to money spent on each side of the trade. It's not so important to do the 22s and 18s if you have to do the 22s and 17s to find a comparable cost. I would do this. Dwayne, excellent question, my friend. This is called a epic earnings trade. I mean, this is beautiful. As lovely as one can be coming around earnings time. So let me explain what exactly we did. Okay, July 8th, we placed a bet. And that bet is going to be $2.85. Okay? $285 per one lot. And what we did is we bought a call at 27.5 and we bought a put at 22.5. That's it. 27.5, 22. We are long stock and we're short stock. Okay? Now, 7 days later, 37.5. We rally like, I don't know. We rally like UPST just had a new form of energy. Like this thing rallied like crazy. So what did we do? We sold premium. Sold. So we originally bought for $1.63 and we bought for $2.22, right? We know that together, those cost $3.85. So what did we do? $3.85 of risk. Well, then we sold these because the market rallied and then we bought them back when the market came off 10 days later. So $2.18, then we buy back for 59 cents. And then we get to keep the difference. So what is that going to be? $1.18, $1.58, $1.59. Okay? So $1.59 we get to keep. So the original cost was $3.85, right? Well, now we just brought in $1. I'm going to make it $1.60 for my easier math. So now we have $2.25 at risk. $2.25 at risk. This position we got in and then we got out. So we just locked in profit. We're still holding this position and this position. $2.25 of risk, $225 of risk. Well, UPST, July 8th would be right here. When it rallies, then we sold. When it came off, we did nothing. Well, actually, when it came off, we bought back what we sold. Then we had earnings, and it flew higher. And so our $2.45 of risk turns into $8. So that is how everybody's able to lock in 344% on this UPST trade, which was just absolutely freaking perfect. Congratulations, all my earnings traders. Now, let me get back in the center. As I said, a little bit nervous this week going away, making sure everybody's okay. But with volatility rising so much, we are long volatility. That's why we want to be patient. And then when you get an opportunity to lock in profit, you go and you lock in those profits. So congrats to all our traders, especially UPST. Loved all the communication in our Discord. For everybody in our All Access, you guys don't go anywhere. We're going to go over our All Access portfolio.